Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. Founded it 21 years ago back in 2003 to provide some of the most advanced technical analysis, market commentary, trade ideas, and my personal passion, developing mechanical trading algorithms, such as our SPY and ES mean reversion systems with about 90% winning trades, and of course our amazing KISS systems, which I sent a video out today. We made that officially live, the subscription service for that. And if you're just on YouTube, you're not a subscriber, you should consider subscribing in addition to having access to our mechanical trading systems, which quite honestly are outstanding. We have some of the best technical analysis on the market analysis. We give you actionable trade ideas. There's a community, you can ask questions, you name it, really cool stuff. Our best subscription is our 6-month subscription because of the cost savings. Okay, it's been about a week, well, not exactly a week. The last YouTube video I posted was last week on Wednesday. Since that time, Steve Nelson's put out a couple newsletters. One most recently on the weekend. He doesn't post on YouTube, so that's why I'm doing a video today. And I'm going to go ahead and get this recorder started now. This is our backend recorder for our website subscription service. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Monday, September 23rd newsletter. Tonight's newsletter, as you can see, divided into 6 major sections. Same general theme as I always keep. By the way, I'm going to do some discussion on the KISS systems. As you may know, shortly after the market, I sent out an email discussing the KISS systems. I did a newsletter, I did a video, and we officially made that section live. Remember, the KISS systems have been on the website since January 2023. So quite a long time. It's been an amazing resource, covers 750 stocks and ETFs, daily, weekly, fully automated systems. You can follow them fully from entry to the stops to the exits, or you can use them. It's just half systems by using the stop technology. We have the high performance KISS systems, text messages, you name it. But our intention was always to charge for the KISS systems, but I'm going to go ahead and make that live now so we can start to recoup some of the cost we've incurred over the last couple of years. Hopefully you guys understand, but again, you got to realize, guys, Breakpoint Trades is a business, and we haven't raised prices since 2011. So everything has been kept here very reasonable, and so hopefully that shouldn't be a problem because there's nothing else out like it. After that, again, we'll go back to the general market newsletter. We'll look at that. Nothing changed from the weekend newsletter. So if you listen to Steve's weekend newsletter, again, absolutely nothing changed. Today was simply just a sideways consolidation. In fact, it was a real snoozer. What I mean by that is volume was about half of what it has been in recent days. So it was a good day to take a nap, go do something else, etc. Now we see if we get some fireworks later in the week. Again, nothing's changed with the trend. Like I said, a lot of economic news this week, and of course, wild card would be, if something happens in the Middle East. I know Israel has still been quite aggressive, going after Lebanon and stuff like that. And what would the market do if you had a much more full-scale Mideast war? Probably wouldn't be good, but it is something to be aware of. And let's go ahead and get started with the newsletter. Let's talk about the admin KISS systems. So first image below, item number 2. Again, earlier today, just after the market, I sent out a detailed email and video about the KISS system launch. So I'm sure a lot of you already watched that, but I'll cover it briefly here again. KISS systems, as you know, have been live on Breakpoint Trade since January 2023. They've been an amazing resource, quite honestly. We have the KISS systems tracking 750 stocks and ETFs. We have daily time frames, weekly time frames, automated email messages to your favorites. Well over 430 of you have been receiving daily email updates to your favorites. We launched about a month ago the high performance KISS systems, and everything's been running very smoothly there. They're much more active than the other systems. They have higher performance. They alert you via text message, etc. Anyway, so we've launched the official membership for the KISS systems. There's two options. There's a monthly and a 6 month. And quite honestly, the 6 month is your better option, guys, because first off, you get a discount by paying 6 months. And then, of course, you can use the coupon KISS20 for 20% off. The link to the sign up is right in the table of contents. Okay. Later this week, we'll be making this section password protected, and there'll be a free basket. All the other baskets you'll need to be a subscriber to access them. And another note, if you're one of the subscribers and over the last year or longer you've been used to receiving daily email updates for your KISS system favorites that you've selected, you'll no longer receive those emails unless you're a subscriber to this. So if you've really enjoyed receiving those automatic daily updates on your favorites and you want to keep getting those, you'll need to subscribe. Okay. Next, image number 3. So I did add a new system to the high performance system. I added the semiconductors SMH ETF 65-minute version. So here's the stats. Honestly, very good stats. Now the KISS systems have anywhere, the average winning percentage is 50 to 70% winning trades. All right. Trend systems aren't like mean reversion systems. Mean reversion systems have around 90% winning trades. Very high winning percentages, but they tend to be short term. Trend systems are different. They'll catch huge runners, winners, they'll hold trades for months at a time, and then you'll get a bunch of little whipsaws. And so, trend following systems, 50% to 70% is average. So this new semiconductor 65-minute system has 52.7% winning trades. And that's fine, guys, because the losers are very small, but then it catches huge runners. They could make up 3, 4, 5, 6 previous losers quite easily. So that's why these systems do well over time. 74 total trades over the history, profit factor of 5.5. If you look at the average time in trades, about 45 days. That's the average, total average, but the average on winning trades is 76 days. On losing trades, it's only 10 days. Okay, so it gets rid of its losers fairly quickly. And just take a look at the stats below versus traditional buy and hold. So this year, SMH on the high performance would be up 52.3% on 6 trades. Buy and hold would be up 36. So it's beating buy and hold nicely, and it's obvious. And the other real standout is the drawdown. The drawdowns are so much lower on the high performance than they are buy and hold. You can see max drawdown this year about 6%. Buy and hold 29%. Not even a comparison. Look at 2022, that bear market year. Buy and hold lost 34%, 47% drawdown, whereas the high performance system made 18.5% that year, and only a 5.65% max drawdown. So, roughly 9-fold less drawdown. So it just gives you a great example. Again, I just added this morning. So this is now live in the high performance section. So you can utilize it going forward. You can set it as a favorite, you name it. Next, image number 4. So one thing exciting, in the future, we may be able to offer automated trading for the KISS systems. Traders Post is the service we're investigating. Theoretically, we could send them our trade notifications for our systems, our high performance systems. And if you sign up with them and have an account with them, you can link to our systems and you can have them automatically traded at your broker. Pretty freaking cool. Again, don't expect this in the next week, in the next month, or maybe 2 months. We have to get this working, and then we have to test it on my live trading account for at least a month or 2, just to make sure all the trades are going, the systems are matching, my systems are matching the trades that are executing my account, etc. But if it looks good, it is something we could potentially launch in the future. And finally, image number 5. So here's some of the brokers that Traders Post support. You can see a lot of, it's not going to support every broker here, but there's a lot of nice brokers here. TradeStation, I see Robinhood, E-Trade, Interactive Brokers. So quite a few options here. I'm sure a lot of you have at least one of these brokers. But again, this is something that we may be offered in the future, which I think would be pretty freaking cool. And I think you guys would agree as well, because the KISS high performance systems, they're awesome, but you have to do them manually. And sometimes there's a lot of messages and text messages, and it's, full-time job sometimes keeping up with it. So having it completely automated for you could be a pretty cool option. All right, let's move back to the general market newsletter. So image number 6 shows the index sector table, what transpired today. So you can see, again, slight gain for the major indexes, most of them, just albeit slightly, while the Russell was slightly down. As far as the 21 market sectors, again, small moves here. A few sectors down, more were up than down, but mostly muted moves. We do continue to see, however, strength in some of these defensive sectors like consumer discretionary and utilities. Currencies, US dollar up 0.14%. We have a potential divergent low, fifth wave bottom. I'll show the chart when we get to it further below. Bitcoin slightly down today. I still like the bigger picture weekly chart though. Commodities, mostly to the upside here. The index now is just fairly flat today, mostly due to crude oil being down 0.9%. Crude oil has a fairly big weighting on this DBC index. Big gain in natural gas up 5%, breaking out of that base I've been showing. Uranium up 3%, agriculture up 1.9%, corn, wheat, coffee. I mean, the way these agriculture commodities are doing, that's not going to help inflation, particularly at the grocery store, as you know. Precious metals, gold, slightly up today. Again, $2,650, guys. I mean, think about that. Remember, one of my targets for gold is $3,000, but are you surprised that it's up here, given all the debasement of these fiat currencies? U.S. spending $1 trillion every 100 days. I mean, honestly, and all the BRICS things that are going on, where the gold-backed new currencies, honestly, there's going to be some real changes here in these world currencies in the future. Anyway, but gold slightly up. However, silver got smacked, 1.5% down. GDX down as well. As far as the bond market, little bounce in the 10-year, 30-year Treasury yield. And of course, this yield curve, the 10-year and 2-year, is at 1.04. So remember, it came from an inverted state that had been there for the longest in history. To me, that will signal a recession sometime in the future. Next, image number 7 shows the economic news calendar for this week. Plenty of things in the docket. Like I said, I'm not going to go over all this, but the other thing to keep an eye on, or to be at least aware of, is the potential geopolitical Mideast situation with Israel and Hezbollah, stuff like that. If that were to escalate out of control, market may not like that. All right, moving on to the chart. So first chart, item number 8, here's NVIDIA. I've been showing NVIDIA first for a while instead of the indexes, so I'll just keep that tradition. So here's the daily chart of NVIDIA. Again, essentially going sideways here. You have a very obvious coil forming, right? We're basically right in the middle of this coil. You can see how price is perfectly ping-pong between the supply and demand zone. It's just absolutely perfect. Otherwise, we're coiling here. And in fact, if you look, there's a potential small coil right here as a potential fractal. So let's zoom down to a smaller time frame. Chart number 9, here's the 60-minute chart, so you can see the potential little coil on this time frame. We'll see what this does tomorrow. You can see how there was a little inverse head and shoulder pattern at the September lows. Next, moving back to the major indexes, chart number 10. Here's the chart showing the 5 key major indexes. Again, guys, I mean, nothing changed today. Essentially, small doji candlesticks. And in fact, if you look at the NASDAQ and S&P and Dow, notice you have 3 dojis in a row. So Thursday, Friday, and today. So indecision candles. So we're either going to get a quick thrust up or perhaps a pullback. Definitely, those 3 dojis are definitely something to be aware of. Next, chart number 11, here's the daily S&P KISS system. Again, no changes. Last week, the smart trailing stop moved up from 53.71 to 54.92. And no changes. The only thing I will say is that we have a DeMark 9 here today. Doesn't mean we stall there, but those DeMarks have been pretty good, especially those DeMark 913 combos. You don't always get those. All those produce pullbacks. Right now we got a DeMark 9. Next, chapter 12. Here's the 4 time frames. So the daily up here, the upper left, see the DeMark 9. Obviously, nice sell-off from the resistance cycle there in August. Nice rally from the support cycle. ATR is supporting all these other time frames now. Next, chapter 13, here's the weekly view of the S&P. Again, last week we took out that high. New all-time highs here. We do have some divergence starting to develop here. You can see on the MACD, on the RSI. As Steve said here, divergence is not a sell signal, but it is something to be aware of, and it could eventually play out, so we're just going to monitor it. Chapter 14, here's a daily view of the S&P. Steve showed this on the weekend, this ending diagonal. So you can see the wave 1, 2, 3. That correction we had from the July highs to the early August lows was a wave 4. And this is working on some sort of wave 5. Again, this could unfold in many ways. It could be an A, B, C. It could be a 1, 2, 3, 4, 5. That's one option. Chart 15, here's a half-day chart. This supports that leading diagonal above. So you could see the wave 3 highs at the August highs. Perfect 3-wave ABC pullback into August is a wave 4. And either an A, B, C, or a 1, 2, 3. Okay. Chart 16, here's a daily chart of the S&P. This is the chart I was showing over the last couple weeks. Again, it shows you that wave 3, 4. This would be the bullish count. Wave 1, 2, and 3. Like I said, that's your super bullish count. With this is a wave 3. The less bullish count would be this is a wave C. Either way, bulls are in control, guys. Chart 17, here's a 30-minute view. Now, you can see the little double bottom we had there in early September. You can see the wave count structure here we've been showing. Wave 1, 2, 3, 4, 5. Now, if 5 is here, then I'll be looking for maybe a lower high here and a pullback in a C. Notice there's an open gap. Again, wave 5 may not be in. It could also be pushed out over here. So we'll see what unfolds tomorrow. Futures are pretty flat tonight, so we're not seeing any big movement tonight. And chart 18, here's a 10-minute view. Notice you got a coil forming. So honestly, this could easily pop to the upside again, shift that wave 5 over to here. Oh, we'll see what transpires tomorrow. And chart 19, here's another 15-minute chart. I meant to remove this one, so let's go ahead and move on. Next, chart 20, here's the triple Q's weekly view. Steve showed this in the weekend. It's uptrend channel. Long-term uptrend. You can see the resistance zone up into here. Chart 21, here's the KISS trend system. Again, no changes here on the triple Q's KISS. Chart 22, here's the 4 time frames. Daily is the upper left. Beautiful rally off that support cycle from a couple weeks back. Now we're pulling back though from this resistance cycle on the half a day. So we'll see. We are holding the ATR in all these smaller time frames. We'll see what it looks like tomorrow. Next, chart 23, here's the standard daily chart. Again, last week we gapped out of that coil-like pattern downtrend line. And you can see the 3 doji candlesticks. So definitely some indecision up into this area. Note there is an open gap above that was never filled. That could be a target on a quick thrust to the upside. Chart 24, here's a half-day chart. Again, you can see that open gap above that was never filled. It could be a magnet. Similar to the S&P, you can see the 5-wave structure here. Either that 485.55 was a wave 5, or it shifted over should we get another high here. Chart 25, here's the 60-minute chart, shows you the same thing. The wave 3, 4, 5, the wave 5 is either there or, like I said, it's shifted over here. If the wave 5 is there, then you would get a lower high here than at least an ABC pullback. Chart 26, here's a 30-minute chart showing the wave count. Like I said, either wave 5 is here or here. Chart 27, IWM small caps, been pulling back since breaking out of this coil. Honestly, though, it still looks okay to me. Volume patterns are still decent. To me, I'd still be looking to buy this on a pullback. It needs to hold this broken downtrend line, but small caps generally do better whenever the Fed cuts rates. So if we start having if we have a nice rate cutting cycle, that could help this start to eventually rally and play catch up, outperform the other major indexes. And lastly, chart 28, here's the 2-hour review. You can see how we got into that resistance zone last week, pulling back. But it looks fine here, no MACD divergence or anything. And we'll see what happens tomorrow, guys. Moving on, chart 29, here's the VIX. Continues moving down, approaching that 200-day moving average again. That was support last time. It is getting pretty low here. Chart 30, here's the 60-minute view of the VIX, where we look at these gaps. The VIX likes to fill these gaps. We're into this open gap down here. We haven't filled it yet, though. So on a further rally, I'd expect to fill this gap. Notice there's some other gaps down here. That would require new all-time highs to fill those. And, of course, you have some gaps to the upside. Moving on to the bond market, chart 31. Here's high-yield corporate, little pullback here. Again, this has been very strong. That's been actually supportive of the market moving up. It is quite overbought here. Look at the RSIs. There is no MACD divergence here, but it is quite overbought, quite extended. Next, chart 32. Here's the 10-year Treasury yield up today. Not surprising. Remember, we had this nice little MACD divergent low last week, so that's been playing out for a bounce. You also had the RSI divergence. And chart 33, here's the weekly view. You can see, again, it's trying to bounce off this weekly demand zone with this potential ABC 3-wave pullback. And chart 34, here's the yield curve. Like I said, it was inverted for, since early 2022. Finally lost that inversion a few weeks back, and it is strongly above zero now. Now that's important because in the past, whenever the yield curve has been strongly inverted, after it goes back above zero to an uninverted state, usually recessions start 3 to 6 months later. So I still think we're going to get a recession, guys, because again, this has been one of the best predictors of that. Moving on, we're not going to look at a bunch of sectors. Steve just covered those in the weekend. Nothing changed today. I will look at a few. Here's biotech. Last week I said this looked pretty good, kind of a descending triangle. Now you can see pulling back. Pretty ugly candle today, but again, it could still recover here. Notice the uptrend line here. So I'm going to keep it here. Should it find support around here and start to curl back up, I think on the next test of the highs, I think it'll break out. So we would still want to keep an eye on this. Again, this could keep going down and lose this support and fail. But for now, we're going to keep an eye on this. Chart 36, here's consumer staples. This area has been super strong. Tends to be a defensive sector. It's still quite strong. You can see I added a little support trend line there. Now, should this make a new high, it'll set up some MACD divergence, so that's something to watch for. Chart 37, utilities. I mean, utilities have been just on fire. Last week they were overbought. They pulled back but bounced off that steep uptrend line, making a new high again outside its upper Bollinger Bands. There is a little bit of RSI, tiny RSI divergence here on the 5-length RSI. This sector has been crazy strong. Defensive sector. Chart 38, energy. This has been bouncing back lately. XLE, you can see it bounced off that demand zone. Off those doji candlesticks we pointed out. You could see the last time in early August you had similar dojis that produced a bounce. Now we'll see if this can eventually clear the downtrend line or not. Crude oil, of course, is not helping. It's quite weak. And finally, chart 39, here's FXI. That's the Chinese ETF. I showed this as a potential slanted inverse head and shoulder pattern a couple weeks back. You had a higher low there. First, you could see how it rallied off the demand zone in August. It's had a nice breakout from here. Really good. Look at the volume break. MACD looks healthy. The moving average ribbon's just starting to expand, so this looks pretty good. All right, moving on to commodities. Chart number 40, here's DBC. Now this is the weekly chart. I'm just showing the weekly because we did briefly lose and then recover that 200-week moving average, and we bounced up again. Here I redrew the pattern sort of as a horizontal channel. Chart number 41, here's crude oil, which has been broke down from this coil pattern back in early September. It's bouncing back, but remember guys, this broken trend line is now resistance. So this is an area where it could fail. Now, if it recovers that, that would be a positive, but that is resistance for now. Chart number 42, here's natural gas, UNG. Nice pop today, up 4.9%, rallying out of this beautiful horizontal rectangle base. So at Breakpoint Trades, I put this out as a long idea back here in early August out of this wedge. You had MACD divergence. Gave you a great trade to that 15-20 area. Needed to take profits though. Came down, gave you a second buying opportunity, double bottom there. So you could have bought it again. And technically you could have bought it again today on the breakout. Looks really good. Look at the MACD, or the moving average ribbon. It's pretty tightly wound, just starting to curl up. That's when you can get your bigger trend moves. Chart number 43, here's copper, slightly up today. Here I added a potential 1-to-1 symmetry. So something to watch. See if it stalls out there or not. Chart number 44, DBA, agriculture continues to be on fire, up another 1.9%. Not helping food prices at the grocery store. Chart number 45, here's that monthly chart of DBA. I love the monthly chart here. Remember this monthly flag? You can see you're starting to break out of it. Last time we stalled at that supply zone, but notice you got supply zones above that I think would be your longer term targets. That does it for commodities. Chart number 46, here's Bitcoin. Now it's slightly down today, but otherwise I'm just showing the weekly chart because to me, this does look like a pretty obvious fourth wave correction. It bounced off the weekly demand zone a couple times. Eventually, I think this breaks out to a new high in a wave 5. Some tradable ETFs, BITX, that's the actual 2-time leveraged ETF. Downtrend channel, but it's one to watch if you want some leverage on Bitcoin. Chart number 48, here's the non-leveraged BITO. Again, there's other ones, GBTC, etc. But those are a couple options. ETF options in the Bitcoin. Next, chart number 49, US dollar. Bouncing today, and it's up tonight here, up 0.35%. But again, guys, this is what I talked about. You have potential 5 waves down with a potential 5th wave low with MACD divergence. If the dollar starts to rally here, maybe this will finally give the pullback in precious metals that we've been hoping for. We'll see. Chart number 50, here's US dollar on the weekly. Okay, you can see you got big support approaching down here. You do have some RSI divergence here on the weekly. Chart number 51, here's gold. Slightly up today, but pretty much a doji candlestick. Again, it's had a heck of a run this year. It's up over 20%. That's a big move for gold in a year. Chart number 52, here's gold on the weekly. Like I said, we're still monitoring this potential wave 3 of 5. So again, this is going to go till it ends. It could either end now or it could go into a parabolic state, and then it needs a longer rest. So we'll see what this does. But for now, bulls are still in charge. Next, chart number 53, silver. Now silver was down today unlike gold, but it did bounce off its 9 EMA there. Remember, you have a couple higher lows in place. So if you really wanted to give it wide girth, you'd use a stop at that higher low, that second one. That's, that may or may not fit your style, but that's one option for, a gold bug or someone who really wants to hold this and give it some room. That's a logical stop area. Chart number 54, here's silver on the monthly chart, this 4-year coil, which broke out earlier this year. You can see I'm projecting over time for this to go well into the upper 40s, if not make new all-time highs. Next, chart number 55, here's palladium ETF. Remember, this gave a great trade a few weeks back, breaking out of this little base. Palladium and platinum have underperformed gold. They've been downtrending, unlike gold, which has been uptrending the last couple of years. Tried to break out of a little base a couple weeks ago. It's pulling back. Now I want to see if it can find support at the broken trend line. I do like it here. I did take profits on that first break. I'm looking to buy it back. You can see your moving average ribbon's quite tightly wound. When we look at the daily chart, chart number 56, here's the daily. And again, you can see it just got overbought in the short term. It was outside its upper Bollinger Bands 5 consecutive days. Super wide moving average ribbon. This needed to work off basically mean reversion, which is what it's doing. Now it is below its 9 EMA, so your next support would be the 20, but I am looking for a higher low sometime in this pullback. Next, chart number 57, GDX. Reversal candle today, kind of ugly candle. Still uptrending, but it is stalling at some resistance here. Chart number 58, here's GDX on the 2-hour view. Steep uptrend channel. The one thing that caught my attention was this pretty strong MACD divergence. Just following up on some individual names. Some of these gold names that I talked about early this year in February and March have been monster trades if you've stayed in them. So here's AGI, Alamos Gold. I mean, just look at this puppy. Look at that. After breaking out of that base in 2022, it has just been going on fire. It's had a hell of a year. Really a hell of the last couple of years. It's went from $6 to $21. Chart number 60, here's Newmont, same deal. I talked about this double bottom way back in February, March, and this thing has just been off to the races. Chart number 61, here's a gold stock dividend play that I own, GGN. This pays about an 8.5% annual dividend, and it pays monthly. You can see all the dividends. It's only 3 cents per month, but it pays monthly, and it's only a $4 stock. So it equates to about an 8.5% annual dividend. Pretty good. Now, should JDX have a correction? Here's dust. I showed this pattern last week. You can see we're basically at the bottom of this potential wedge. So let's see if it finds support here or not. And finally, moving on to the trade idea. So chart number 63, YUMC. It's a China play. It's been on a list forever. Been very patient with this one. You could have triggered, a couple weeks ago on one of these little breaks. I said to be patient with the stop, wide stop, and finally targeting one of my first targets, the 200-day moving average. The next target would be filling that gap, but it's been a good trade. Chart number 64, Chesapeake Energy. Awesome move here out of this nice horizontal rectangle pattern. You had a double bottom there, then you took out resistance last week. Excellent trade to the 200-day moving average. Hope you guys caught that puppy. Chart number 65, Cores, another one that's done nice out of this coil. If you're still long, guys, some shares, I'd put a stop right at that higher low there, the dotted line. No reason to give any more room than that. Chart number 66, Intel. I talked about buying this a couple weeks back at that support low with a very tight stop. Anyway, still looks decent here. Look at the volume patterns. I moved the stop of my remaining positions to Friday's lows around 2035. Chart number 67, Oscar. Been a heck of a trade out of that breakaway gap coil. Pulling back though. Hope you took some profits already. Chart number 68, Flute. Another beauty out of that rectangle pattern. Still uptrending. Chart number 69, Chubb. Beautiful move out of that coil. I suggested to stop at that higher low, and if you're still long, I'd move it up now to that next higher low where you see my second dotted line. Chart number 70, GPN. Now this one broke out. It's pulling back. I want to see if it can find support at this broken trend line. So that's going to continue to monitor, and it still looks okay. Chart number 71, here's RINC. It's a dividend play. It's a REIT. This should pay toward the end of September. And so actually the pattern looks pretty good too. So one to watch, guys, for dividend. Chart number 72, BEKE. Here's a new idea. Nice pop today, but it still looks like this could follow through a momentum over today's highs over 1552. Anyway, guys, let's see what happens tomorrow. Quick check on futures. ES futures are down 3 points. Gold is up 30 cents. Bitcoin's down $400, and NASDAQ futures are down $2. So really quiet evening. We'll see what happens tomorrow. Have a wonderful evening, guys. Take care.